How's everybody doing? Welcome back. We are in our final workshop, and we are going to be talking about the financial and legal planning. I've had up here on my screen our schedule, and I'll go over that again towards the end, but want to make sure everybody's aware of what we got coming and what's expected over the next 2 months as we work on our business plans and get the competition ready to go. All right. Robin, question, concern? Okay. All righty. So I'll come back to this schedule so that you all are up to date, up to speed as to what we got going, and then we'll answer any questions as we go here as well. All right. So, yep. See a hand raised. Ayana.
Hi, how are you, Professor?
Good.
It's not exactly related to the business plan, this competition, but it's related to the Management 216 course offered in spring. I completely understand if now is not the right time to bring this up.
Yeah, go ahead and send me an email about
Okay.
that, and I'll be glad to address it. Yeah, Management 216 course is kind of interesting. What happens is we have students who work with the winners of the competition to help them grow their business, develop the marketing that they might need, develop websites. So it's really you have a team of people who are working with your business. That's one of the benefits of that we give to the winners for the competition. Not only do you get the mentoring support, but you also get a team of students working with your business to help get it off the ground. And then we also get, you also are assigned a mentor to the top 12 finalists to help you prepare for the competition, the pitch. You get coaching, all kinds of stuff to help you get ready. And so another hand raised there. Who's that?
Hi, this is
Yes.
Arnetta. I'm part of a 3-part team, the
Yep.
Noki Grip.
Yes.
This had to do with the business plan timeline. So
Yep.
I see November the 12th, you want 5 to 7 pages. Is that what we consider a condensed version? And then January 20th is considered the extended version?
That's a great way to explain it. Yes, so condensed version for the initial round, and then you're expanding on that for the final round. But yeah, that's a great way to explain it. All right, so without further ado, let me get into this with you here. And we're going to dive into the financial piece of this. And I saved that for the last one because it tends to suck the life out of our planning here. You know, we talking about the vision, the goals, you know, what this thing's going to look like, our mission. We talk about the marketing, we talk about the fun stuff, and then we got to talk about the financials. This is the reality where you know the rubber hits the road to say, one, are we going to make any money off this thing? Or is this just going to be a hobby? And how much is this really going to cost us? And we're going to be able to afford to do this. This is all, I can also tell you that this is usually the weakest part of any business plan. So if you spend some time on this and really work hard on it, develop a compelling financial story, and I call that a story because that's really what this is about. If you're able to develop that, you're going to be so far ahead of the competition. And so I encourage you to take this seriously as we dive into it. And let me pull up my presentation here for you. And we will dive into this. Bear with me 1 second. All righty. Now, this doesn't need to be scary. yes, we're talking about numbers, and all of a sudden people start getting sweaty palms and start worrying about the math and all that. But think of it really as a story that you're going to tell using the numbers. And this is going to be something that's going to be important when you're presenting to the judges. And you already have this big idea of what you want to do. Now we need to talk about, okay, how is this going to make money? And what are going to be the costs involved in this? And are you going to have enough money to be able to do this to keep it sustainable? Profit is a good thing. It is not a bad thing. You want your employer to be making money, to have profit, or else they're not going to be able to give you a raise. They're not going to be able to hire additional people, give you the resources that you need. You need to make a profit. The more profit, the better, because you can do whatever you want with that money as a business owner. You can plow it back into the business, or you can take a vacation. Whatever you want. It's your business. Whatever you want to do. All right. So let's get into this. Why is this important? Well, it's a compass, it's a roadmap as to what are the priorities for the business, where are you going to spend this money, and then how are you going to develop a return on that investment so you can continue to grow. It is going to give you direction. So it'll also keep you on track. So when you are making your pitch, and yes, it's going to be very similar to Shark Tank, there'll be a panel of judges there. You'll have 15 minutes to make your pitch. And in addition, you're going to have that extended business plan that you're submitting to tell your story, but you will want to know your numbers. All right. You need to have a income statement, a cash flow statement, to be able to show when is the money coming in, when is it going out, and are you going to be profitable? Do you need to be profitable from day one? No, you don't. You may take months to be profitable. You may take years to be profitable. That's fine, as long as you're able to explain why and at what point will you start making money. I gave the example earlier with Jeff Bezos and Amazon. He knew from the very beginning he was going to sell everything from A to Z. But what did he start with? He started selling books. Why? Because they weren't perishable, it was easy to package. And so when he was talking to investors about his big idea of selling everything from A to Z online, they came to his office, and in his office, he was working in a garage, the old classic story, working out of his garage, and he had a desk that was made of an old door as a tabletop and 4 2x4s. What do you think investors thought when they saw him sitting behind this desk that was made of an old door and 4 2x4s? They loved it. Why? Because he wasn't spending all that money on himself, on fancy office. He was spending it on the business and putting it back into the business. After he was selling books, doing well, investors were asking, hey, are we going to start making a profit? Nope. What are we going to do? We're going to start selling more stuff. We're going to start selling clothing, shoes, all kinds of stuff online. Okay, great. Starts selling more stuff, making more money. Are we going to make a profit? No. We can't rely on the Postal Service for delivering our services, our products. We're going to invest in our own fleet of trucks and warehouses and logistics. It wasn't until almost 2 decades that he was building this till they made a profit. But he was able to tell the story of why they're not making the profit and what they're doing with the money. All right. So the financials are important, because if you're going to somebody asking for money, they're going to want to see, where are you spending the money? How is it going to be used? lenders will require it. You all see information all the time about how the SBA has all kinds of loans, low interest loans, loans for small businesses, startups. Well, the reality of it is that you're going to need at least 2 years of financials to be able to show. Right? Nobody is going to invest in something unless they know where is the money going, how is it going to be spent, and do you have a history already of showing that you can do this? Right? So yes, there's a lot of information out there, a lot of promises about how there's all this money available. In reality, people want to spend the least amount of money and the least amount of risk. So what your job is to show is how the money is being spent that's going to reduce that risk and maximize their investment. So even if you go to your rich uncle, say, hey, got a great idea. Great. Show me the financials. How are you going to make money? Where's the money going? And are you going to be profitable? Because I need a return on that money. Show me how you're going to make the money and how I'm going to make my money back. So keep this in mind as you're working on your financials. Be realistic. What I often suggest, and I do this myself, what we'll do is we will first come up with our financials, what we're anticipating. And then we start to go through it and try to be a little more realistic about it as to how we're going to fund this. So one of the things you might do is come up with 3 different scenarios. One would be best case, and that's usually your first one. And then worst case scenario. What if we don't bring in as much money as we're anticipating? What if our costs go up a lot more? Just as anybody in business, since COVID, costs went up a lot. So, and nobody was anticipating that. So what if your costs go up? What if you don't bring in as much money? Research it. There are lots of places. If you do a Google search, you can actually buy different types of financial plans from businesses, for not a whole lot of money, just to get a sense of what others are anticipating, what they may be using for their business plan purposes, and then revise it. So I'm in the process of doing this myself right now, and we have revised our financials probably at least 7 times before we're going to some investors with our big pitch. So constantly revising those numbers to make sure that they make sense and that people are able to understand it, and it tells a story. So the story of what it is that you're planning to do with it, how you're going to make the money, and how you plan to be profitable. All right. Lastly on this, for this advice, keep it simple. All right. So don't get caught up in the weeds. You'll need to know some of the details of it, but as far as what you're showing the judges, you can keep it at a higher level. And then if there's questions about some of the financials, you want to be prepared to support those figures. All right, but keep it simple. A 1-page financial plan is really all you need. And so what I want to do is bring up the example that we've given you in the template, business plan template, that I think you'll find helpful. Now, do you have to use the financial plan that we've given you in the template? No. Some things are going to be more relevant than others. But here's the financial plan. And like I would state here, you're going to need to provide a lot more detail than what we're providing here. But notice the years, all right? So to be in the business plan competition, you can't have been in business for more than 3 years. So 2021 would probably be the earliest that you have in terms of the history. But you want to project out, what is this going to look like? Now, in terms of the revenues, you want to break that down. Where are the sales coming from? In terms of the expenditures, include those details of where the costs are. But what you want to get to is this number as far as the net profit. So here's a pro forma that you can use. And notice year 0, before you even start opening up your doors, advertising, you're going to have some expenses. What is that going to look? It doesn't matter what kind of business you have. You're going to have some type of expenses, whether it's building a website, if you're running ads, marketing. What are those costs that you're going to have before you even get started? So that's year 0. And then break it down. What often we'll do is say, okay, let's look at it in terms of a year, and then on a monthly basis, how would that average out? So if it's easier to think of it in terms of monthly, do that. But again, keep it simple. There may be, it may be cyclical. Some months may be stronger than others. That's fine. Perhaps just do an average so that, again, it keeps it simple. There will be ups and downs, but sales, how much are you bringing in? Sales each month. And then other could be other sources of income that you might have from the business, other services that you may offer. Or if it's just one thing you're selling, that's fine too. If you're running a hair salon, all right, for your sales will obviously be the customers that you're serving for the hair, but the other could be hair products that you're selling in addition to that. Then you have your total sales and then cost of your sales. So this is the cost of the product. So if you're selling makeup, for example, well, chances are you're not creating the makeup from scratch. You're buying it from someplace else. So it'd be the product that you are supplying and offering for resale. So there's an initial cost that you have. There's material costs that you would have, include that there. Any other costs, again, keeping this open-ended. So you have your total cost of goods. That would be your gross profit. Notice the gross profit, all we're talking about here are your sales and the cost of making those sales. We're not talking about any people, marketing, anything like that. It's simply the cost of making those sales happen. Then you get into your expenses. And we start with the variable expenses. These are costs that change as you sell more. They're variable. So if you're selling picture frames, for example, you have a framing store. Well, the variable cost is going to be the wood, the materials used to produce the picture frames. As you sell more, you're going to need, those costs will go up because now you have additional costs in order to produce those picture frames. If you have people who are selling them, so now you have commissions that you're paying people. Those commissions will go up as you sell more. Freight, supplies. Again, these are all things that are changing in terms of cost based on how much you're selling. Next are the fixed expenses. Just as it sounds, they do not change. It doesn't matter how much you sell. For example, for your home budget, this would be your mortgage. It would be your car payment. It doesn't matter how much you're at home or you're driving your car, those payments do not change from month to month. They're fixed. Same way if you are, again, running a hair salon or a barbershop in this case. If you're running a barbershop, it's the cost of the rent. It doesn't matter how many customers you have, that's not going to change. Utilities may be a fixed expense as well, because month after month, you're going to have basically the same amount. Yeah, you may use the utilities a little bit more from one month to the next. That may change a little bit, but on average, it'll be roughly the same. Salaries and wages. If you're saying, I'm going to hire these people, I have a marketer, I have a computer person, I have a HR person, 3 people, I'm paying them each $50,000 a year. That's $150,000 a year that you're paying them. That's not going to change with the number of sales you do, unless you're paying a commission. And if that's the case, then you put that commission in the variable expense. But everything else is going to be fixed. So you have your total expenses, which is going to include the fixed expenses plus the variable expenses, in order to give you your total costs. And then you can run these ratios to see, okay, what is my expenses as a percent of sales? What's the net loss before taxes? Yeah, we're got to pay taxes. So state and federal, you can anticipate probably about 30%, 10% state, 20% federal. And then retained earnings, that's the money that you have left over to do whatever you want. Put it back into the business, take a vacation, whatever you want to do with that. That's up to you. You're the business owner. Now, do you have to use this one? No. There may be a better one you find out there that's more relevant, but I offer this as an example of how you can keep it simple. And you really want to keep it to probably 1 page, no more than 2 pages. You don't have a lot of room here for your financials. Questions about this? And throw them into the chat. Robin, question? If you could throw that into the chat. Everybody's on mute. So put it into the chat and I will certainly be able to address it there. And while Robin's putting in her question, or other folks are putting in her question, just so you know, there's also some questions here to consider. How are you going to fund the business? Is it going to be with loans, your rich uncle? If you have investors, how are they going to be paid back? When are they going to be paid back? If you're needing capital debt in order to grow, what is that going to look like? Robin, what is the best way to reflect a brand new business? So Robin, what is the best way to reflect a startup business? This is a good way, what I just gave you here, because you want to include the startup costs initially here, because you're going to have them. And then you have your monthly expenses. You can just average them out, and then you're projecting out year 1, year 2, year 3. Hopefully you're showing growth here. But this is a very good example to use for a startup. That's why I included it here for you. Other questions? Go ahead and put them in the chat there. Be glad to address them. Could you explain the monthly section? So this is just the year broken out, divided by 12 on average for a monthly forecast of and that's basically what this is. It's a forecast. If you have some historical information to show from the past year or so, based on what you've already done, great, include that. but the monthly is just simply the year divided by 12 for each month, so that it may be easier for you to work with and also be able to show that to in your business plan. All right, other questions? So, Joanne is asking, would this be for the current year? Asking because my business has been in existence for 3 years. So what you would want to do is show the historical too for the past 3 years, and then show how you're projecting that out for year 1, 2, and 3. So again, what you can do is use this pro forma here, but go back to show the previous years. All right. So again, you can modify this as you see fit, but this is just an example for you to use. A pro forma is a forecast. It does not have historical information in there. If you have historical sales, great. Include them in there. All right. So let me go back to the PowerPoint here. How do I include historical sales in this table? You created a different table. You can use the same information, but then show it previous years. Again, this is just being offered as an example for you to use, but the key here is to keep it simple. And one of the things that you'll want to address is the break-even point. This is a critical piece of information in your financials. If you ever watch Shark Tank, they will ask you this question, or you'll see them asking the participants this question. At what point how many sales do you need to at least break even? Meaning you are covering your fixed costs and your variable costs. You're not making a profit, but what is the minimum number that you need to sell? And so right here, this is fixed costs. You notice it's not changing at all. So this is always going to stay the same, but there's a point where you come to where the sales is going to cover the fixed costs and it's going to cover the variable costs, so that beyond this break-even point, you are making a profit. But what is the minimum number that you need to sell? All right, and how do we calculate that? It's the fixed cost, and I just showed you how you can use that pro forma statement to determine the fixed cost, divided by the sales price of the product or service you're offering. So it's on a per unit basis, subtracted by the variable cost of each unit you're selling. All right, so what we could determine here is then our break-even quantity. So how many do we need to sell in order to break even? And you could do this on a monthly basis, you can do it on a yearly basis, but let me give you an example. So last year, our winner sold custom lamps. He would go to like a salvage yard, and he get from old car parts and make a lamp out of it, or a typewriter and make a lamp out of the typewriter, or parts from a radio and make a lamp out of it. Pretty cool. So looking at on a monthly basis, we can determine the fixed costs. And yes, Danielle, you could use this for services too. Like I use this for my consulting business. What is my fixed cost? What is my average price that I sell each consulting service for, and what's my variable cost for each of those units. And determine how many do I need to sell? How many services do I need to sell to at least break even? But in this case, for the lamp company, so it has a workshop, and his costs, because his time, he wants to get paid for his time. So all that is fixed costs. It does. So he can look at it as terms of $2,500 a month is my fixed cost. The lamps I'm selling for are anywhere between $50 to $250. On average, he determines each month he's selling on his lamps for $125 each. The variable costs, they vary depending on the lamps, but on average, they work out to be about $50 each. Using this formula, he can then determine his break-even point, which is about 33 lamps that he needs to sell each month. So then the marketing, everything he's doing is driven to meet this point, to at least sell 33 lamps every month in order to just break even. He knows that if he does that minimum, then he's going to cover his costs. He'll break even for that month. Is that the goal? No. But at least he has a better understanding of what's the minimum that he needs to do. And again, you can do this for services as well. You have fixed costs, you have variable costs, and you have a selling price for the service. Like if you're running a barbershop, okay, that's a service. Barbershop may cost $2,500 a month in fixed costs. The average price may be $25, but the unit variable cost for each haircut the barber's doing may be $10. So it'd be 2,500 divided by 15, and that is, should have done an easier number. So 2,500 divided by 15 needs to do 166 haircuts each month. Divide that by, let's say we work in 20 days a month, divided by 20, that's 8 haircuts a day is the minimum that would need to be done. So then the business plan is about, okay, how are we going to market our services? How are we going to bring in enough people so that we're doing at least 8 haircuts a day? Or in this case, how are we getting out to front of customers to at least sell 33 lamps every month? Questions about that, because this is important, and it may be a question that you get from the judges. They'll ask, what is your break-even point? So you will want to know, what is your unit costs? What is your average selling price for each unit? And your fixed costs. Questions about this, because this is critical. What about construction services? Different service, different price, may vary. Yeah, so do an average. Yeah, absolutely. The lamps, as you saw, they vary. Construction services are going to vary. So come up with an average. You may even have different tiers. So if you have a higher level, then you need to figure out, well, what's the break-even point for our higher level services versus our more routine services. But yeah, you can use the same thing. And I encourage you to do some research on Google for maybe more relevant break-even point analysis for your business. But you can certainly do that as well. Would you include mortgage in the fixed cost if you're a home-based business? So good question, Danielle. The way you can use a portion of your mortgage. So it's the portion that is allocated for your business in your home. You're obviously not using the kitchen, the bathroom, the washroom, the garage, unless you're working out of the garage. But it's that space that you're using. And oftentimes, so like this is my home office here, and so it works out to be this area, I think, is 10 by, excuse me, is 15 by 15. So that percentage, it works out to be, actually it's 20 by 20. It's almost 400 square feet. So it's 400 square feet, and then that's percentage of the house. That percentage could be used for your fixed costs. And you also can use that on your tax statement to the IRS to deduct the mortgage expense from your business expense. So, but you take a percentage of the space that you're using from your overall house and then use that. All right. All right. So even for multiple rooms, well, if you're using that all the time, that's the key. It's you have to, it's the primary use is what you're using. Now, here's the thing though. Would you include that in your break-even point? You probably don't need to, because you're going to pay the mortgage on your house anyway, whether it's part of the business or not. So it's really not a direct cost to your business. All right. So Danielle, use that analogy I gave you for the percentage of space. Use that for your tax deduction. You don't necessarily need to include it as part of your break-even quantity, because you're not paying additional mortgage because now you have a business. You would have paid it anyway. Other questions about this? Can you explain fixed costs? Fixed costs, exactly as it sounds, it does not change. So, Robin, if you want to clue what kind of business we're talking about, that'll probably give you more specifics about what the fixed costs might be. But these are things that are not going to change from month to month. They do not, the expenses do not change as you produce more. We had the example with the construction service. If you are a home builder, all right, the costs that are going to vary is going to be the cost of lumber, the cost of nails, supplies. As you build more, you need to get more lumber, you need to get more nails, screws. That's not going to change. But if somebody if they have a truck that they're having to buy, a cargo van in order to keep all the equipment in, a trailer, those are all fixed costs, because it doesn't matter how much they do, they need, in terms of sales, they need those particular equipment. And if they don't sell any services, they still have that equipment cost. So Robin has a daycare home business. So the fixed costs for something like that, it could be you as a fixed cost, because it doesn't matter how many people or kids that you're going to have there, you're going to have those costs. But if you're bringing on additional staffing with the number of kids that you're having to take care of, well, that becomes more of a variable cost. But there aren't a whole lot of fixed costs when you have a home care business, because again, with that mortgage, you're going to have that anyway, whether you have the daycare or not. So you're in a good position there where there aren't a whole lot of fixed costs for your business. But in terms of a break even, you can include what it is that your costs that you want to make sure that you have enough kids in the daycare to cover your costs. Can you include your car note and insurance payments as fixed costs if you're a mobile business? Only if you're buying a car for that business, yes. But if you already have a car, then you would have made payments on that car anyway. So it's not an additional cost to the business. So only include those costs that are directly related to the business. But again, you can deduct that mileage expense from your taxes. Meal prep, BG&E. So meal prep, Robin, because it's a home-based business, you're going to have the more meals that you prep is going to be the meals that you prep, the number is going to be based on the number of kids that you're taking care of. So if you're only doing prep for 3 kids, and then the next day you're doing 5, and then the next day you're doing 7. Well, you can see how that varies with the number of kids. Hopefully that helps. What about a leased office space that is used as a home business? Yes. So now that leased office space, you are now renting specific space for that business. Yes. So that is definitely a business related cost that you need to include with to determine what you need to, how many events you need to do to cover those costs. Yeah, so payment salary can be a fixed cost if that's not going to change with the number of people. Where it changes with the number of people is when you're bringing on like salespeople. So as you're selling more, then you need more people, more salespeople to support those sales. So that becomes more of a variable cost. All right. Hopefully that helps. Again, I encourage you to do some more research on your own with that, but you want to nail down exactly what your costs are and at what point are you going to be profitable. What is the minimum that you need to do in terms of sales to be profitable? Hopefully that helps. All that said, what does it take to be a successful startup? Put your answer in the chat. Is it funding? Is it a good idea? Is it good people? Is it timing? Or is it a sound business model that encourages or that ensures that a startup will be successful? Some say sound business model, some say good marketing, all the above. All right. So funding, okay. Good people. Interesting. So here's a short video that talks about the single biggest reason why startups succeed. And this may surprise you. Can somebody just give me a thumbs up that they can hear that? All right. I'm not seeing a thumbs up. Can you hear this? I'm not playing it now,
Yes.
but I'm playing it. Okay, good.
I'm really excited to share with you some findings that really surprised me about what makes companies succeed the most. What factors actually matter the most for startup success? I believe that the startup organization.
Whoops, sorry. Didn't mean to do that.
Is one of the greatest forms to make the world a better place. If you take a group of people with the right equity incentives and organize them in a startup, you can unlock human potential in a way never before possible. You get them to achieve unbelievable things. But if the startup organization is so great, why do so many fail? That's what I wanted to find out. I wanted to find out what actually matters most for startup success. And I wanted to try to be systematic about it, avoid some of my instincts and maybe misperceptions I have from so many companies I've seen over the years. I wanted to know this because I've been starting businesses since I was 12 years old, when I sold candy at the bus stop in junior high school, to high school when I made solar energy devices, to college when I made loudspeakers, and when I graduated from college, started software companies. And 20 years ago, I started Idea Lab, and in the last 20 years, we started more than 100 companies, many successes and many big failures. We learned a lot from those failures. So I tried to look across what factors accounted the most for company success and failure. So I looked at these 5. First, the idea. I used to think that the idea was everything. I named my company Idea Lab, and how much I worship the aha moment when you first come up with the idea. But then over time, I came to think that maybe the team, the execution, adaptability, that mattered even more than the idea. I never thought I'd be quoting boxer Mike Tyson on the TED stage, but he once said, "Everybody has a plan until they get punched in the face." And I think that's so true about business as well. So much about a team's execution is its ability to adapt to getting punched in the face by the customer. The customer is the true reality. And that's why I came to think that the team maybe was the most important thing. Then I started looking at the business model. Does the company have a very clear path generating customer revenues? That started rising to the top in my thinking about maybe what mattered most for success. Then I looked at the funding. Sometimes companies received intense amount of funding. Maybe that's the most important thing. And then, of course, the timing. Is the idea way too early and the world's not ready for it? Is it early, meaning you're in advance and you have to educate the world? Is it just right, or is it too late and there's already too many competitors? So I tried to look very carefully at these 5 factors across many companies. And I looked across all 100 Idea Lab companies and 100 non-Idea Lab companies to try and come up with something scientific about it. So first, on these Idea Lab companies, the top 5 companies, CitySearch, Cars Direct, GoTo, NetZero, Tickets.com, those all became billion-dollar successes. And the 5 companies on the bottom, Z.com, Insider Pages, MyLife, Desktop Factory, PeopleLink, we all had high hopes for, but didn't succeed. So I tried to rank across all of those attributes how I felt those companies scored on each of those dimensions. And then for non-Idea Lab companies, I looked at wild successes like Airbnb and Instagram and Uber and YouTube and LinkedIn, and some failures. Webvan, Cosmo, Pets.com, Flues, and Friendster. The bottom companies had intense funding. They even had business models in some cases, but they didn't succeed. I tried to look at what factors actually accounted the most for success and failure across all these companies, and the results really surprised me. The number one thing was timing. Timing accounted for 42% of the difference between success and failure. Team and execution came in second, and the idea, the differentiability of the idea, the unique idea, that actually came in third. Now, this isn't absolutely definitive. It's not to say that the idea isn't important, but it very much surprised me that the idea wasn't the most important thing. Sometimes it mattered more when it was actually timed.
So Harvard Business Review had a study that was published that also reinforced this idea about timing, and really they called it luck. It was having the right product at the right time, and that's what it was all about. Think about it with like YouTube. YouTube really took off when we had our cell phones and we had cameras on the cell phones so that people could easily capture videos. Many of the products, the reason why they're successful is all comes down to luck. Just right timing, right place, but it's a matter of putting you in the right place at the right time as well.
The last 2, business model and funding, made sense to me, actually. I think business model makes sense to be that low because you can start out without a business model and then add one later if your customers are demanding what you're creating. And funding, I think as well. If you're underfunded at first, but you're gaining traction, especially in today's age, it's very, very easy to get intense funding. So now let me give you some specific examples about each of these. So take a wild success like Airbnb, everybody knows about. Well, that company was famously passed on by many smart investors because people thought, no one's going to rent out a space in their home to a stranger. Of course, people proved that wrong. But one of the reasons it succeeded, aside from a good business model, a good idea, great execution, is the timing. That company came out right during the height of the recession when people really needed extra money. And that maybe helped people overcome their objection to renting out their own home to a stranger. Same thing with Uber. Uber came out, incredible company, incredible business model, great execution too, but the timing was so perfect for their need to get drivers into the system. Drivers were looking for extra money. It was very, very important. Some of our early successes, CitySearch came out when people needed web pages. GoTo.com, which we announced actually at TED in 1998, was when companies were looking for cost-effective ways to get traffic. We thought the idea was so great, but actually the timing was probably maybe more important. And then some of our failures. We started a company called Z.com. It was an online entertainment company. We were so excited about it. We raised enough money. We had a great business model. We'd even signed incredibly great Hollywood talent to join the company. But broadband penetration was too low in 1999, 2000. It was too hard to watch video content online. You had to put codecs in your browser and do all this stuff. And the company eventually went out of business in 2003. Just 2 years later, when the codec problem was solved by Adobe Flash, and when broadband penetration crossed 50% in America, YouTube was perfectly timed. Great idea, but unbelievable timing. And in fact, YouTube didn't even have a business model when it first started. It wasn't even it was certain that that would work out. But that was beautifully, beautifully timed. So what I would say in summary is execution definitely matters a lot. The idea matters a lot, but timing might matter even more. And the best way to really assess timing is to really look whether consumers are really ready for what you have to offer them, and to be really, really honest about it, not be in denial about any results that you see. Because if you have something you love, you want to push it forward, but you have to be very, very honest about that factor on timing. As I said earlier, I think startups can change the world and make the world a better place. I hope some of these insights can maybe help you have a slightly higher success ratio and thus make something great come to the world that wouldn't have happened otherwise. Thank you very much. Been a great audience.
All right. So hopefully that helps here as we talk about this. And you know, what your challenge then is to show that your idea is the right time for the market. And how do you do that? Well, you want to be able to show traction, that this idea is going to work, that there are people who are interested in it, not just interested, but people are willing to pay for it. So you want to be able to demonstrate that either by already having some sales, maybe having some pre-orders. So say I have 125 people who have said that when we come out with this on February 1, that they will buy and that they have pre-ordered. One thing that we will often do when launching a new product is we will put out the marketing. And we used to do this for our books that we would write. We'd actually create the marketing for the book, the book cover jacket, the title, everything, except for all the pages inside the book. We would market the book to see if we would get orders, and we would put all that money, that we got, into an escrow account, wait 30 days. If we got enough orders, we would go ahead and hire the author to write it. If not, we would go ahead and send the money back to the people and say, sorry, we did not get enough orders to create the product. So that's a low risk way to do it, but it's also a way to show traction, demonstrate proof of concept that you're going to be able to move forward with your big idea. That's one way to do it. There are many others, but that is certainly one. All right. All right. So questions about that? Questions about anything we're talking about with the financials? Okay. We'll take a 5-minute break. So it's 7:55 right now. Take a 5-minute break, and we'll start up with the legal side of things, talking about intellectual property and how to structure businesses from a corporate perspective. All right, take a 5-minute break, and we'll start back up at 8 o'clock.
Are you going to send out this recording to people's email?
Yep, just like I've been doing with each of the workshops. I'll be sending that out tomorrow morning.
Thank you so very much. I would love to re-listen to it again.
Okay, no problem.
Okay.
All right, welcome back. And we're getting into the legal planning. Good question. Got here. Is there a rubric or structure similar to provided, I guess, business plan, but an extended version required in January? It's the same business plan template. You're just going to expand upon it in the final version in January. So it's a condensed version, 5 to 7 pages in the initial round, and then you're expanding upon that for the final round. Great question. All right. Next, we want to jump into the legal discussion here. And I sent out to you by email the a worksheet to go along with this. It's a one-page worksheet to help understand the differences with the different types of legal structures for a business. And so we're going to compare the different structures, and we're going to look at, well, a lot of it depends on who is actually going to be the boss, how we're going to account for the money, who is involved in decision making in the corporation. I'll talk about the legal requirements, where the money goes, who gets paid at the end of the day, how are we going to count out those jelly beans, and then what happens if you get hit by a bus or a beer truck, and what happens to the business if you pass away. So these are things that need to think about, like business we're acquiring right now. I'll be the CEO of the business. So investors are saying, hey, we need to take out a life insurance policy out on you. So I'm like, oh gosh. So yeah, because if something happens with me, it's going to impact the business. So they're taking out a life insurance policy on me. So I mean, you got to think about these things. You got to address them. It's the reality. None of us are getting out of this thing alive. So let's let's talk about it. So I gave you that sheet that you have in front of you to fill out some of these things. I did that purposely to keep you engaged in this thing, but also so you have some notes that you can use and really understand what are the differences with the different types of structures. So I encourage you to go ahead and pull that sheet out, fold it in half along that dotted line. So you have just 3 columns there in front of you with the sole proprietorship, limited partnership, and C Corp. We'll address those 3 first and then the other 3 next. So let's jump into it. So who's the boss? Well, for a sole proprietorship, this is just you. It is one person who's running this thing, and you're the boss, you're it. And so that is a sole proprietorship. The benefits of that is that you don't have to go to anybody to talk to them about, here's what I would do for marketing. What do you think about this? What do you think? You're making all those decisions. The downside of that is you're making all those decisions. So if you want a raise, well, you got to look in the mirror. If you're not happy with how things are going, look in the mirror. So you are responsible for everything, what's happening with the business, whether it's good or bad. And so the benefits of that is you don't have to go to other people. Decisions are made a lot faster, but you're also not getting the input from other people that may be beneficial too. Limited partnership. All right, so here you have partners in the business, and think about like a doctor's office. So we may have an orthopedic surgeon that specializes on knees, and we have another orthopedic surgeon that specializes on shoulder injuries, and another that specializes on hips. Well, you can see how a doctor's office like that could really be beneficial from having 3 different doctors as partners, because now they're seeing people who may be complaining about different ailments, oh, we have somebody to help you with that. So in terms of a partnership, now the benefit is you have more that complementary services that you're able to offer. The cons of that is now you have, in this case, 2 other doctors that you may need to consult with who have an equal share in the business. So if you're saying, well, maybe we want to move out to Harford County, and somebody else like, I like Anne Arundel County. Somebody else like, I like Howard County. Well, now you have more people who are involved in those decision making, and it gets more complex. A C corp is like traditional businesses, especially you see those that are traded on the stock market, uh, where they have stockholders. People can invest in that business. So the pros of that is you got a lot of money coming in from investors who want to grow your business. The downside of that is that you have a lot of investors who are very interested in your business and can be critical of times. Now, the only say that the stockholders have is in the election of the board of directors. That's it. So they're electing the board of directors who are then the bosses of the CEO. So stockholders got a lot of money coming in. The downside of that is that you have a lot of regulatory compliance issues to deal with. You could all of a sudden lose money, just as with GameStop. All right. So you can benefit from people who are investing in money, but you could also be at the whim of other people who say, I don't like this business, let's get out. So that's the downside. All right, so one of the critical questions to ask first, who is making all decisions? Who's the boss? Now, the other piece of this is capitalization. How are we going to get the money that we need to run this business? For a sole proprietor, that's going to be difficult. Again, you got to look in the mirror. If the issue is going to be, it's going to be dependent on you to come up with that money in order to get the business started. Limited partnership is going to be relatively easier than a sole proprietorship because you have other partners, others who may be investing in that to help you grow the business. Again, C Corp, the excellent source of capitalization because you're issuing shares of stock and people are buying that. So they may buy it at $25 a share. It's just a matter of how much they're going to invest. That share, that stock, that money is going back into the corporation to help it grow. Voting policy for sole proprietorship, not needed because you're one person who's running the business. So that's the only person who's involved in decision making. Limited partners, well, the voting policy, if we have 2 other partners, well, now we have 3 people who are involved in that decision making. For a C corp, again, you have stockholders who are voting, and they're voting on electing board of directors to the organization. That's it. They're not deciding, stockholders are not deciding on the marketing strategy or whether to add a new business. It's all they're doing is determining who is going to serve on the board, and that board then gives direction for the company. Question. How do you record each with the IRS after you obtain EIN? I will go through that at the end of the presentation about that, about EIN and what you need to do with that. Are angel investors also considered stockholders? So angel investors are not considered stockholders. They, just as it sounds, they're considered investors. And I'll get to that here in a moment. Usually that's with a C Corp. You could all, and angel investors want a lot more money back on their investment. They typically want anywhere from 20% to 30% return because it's usually high risk, therefore high reward. How do you look for good partners? Great question. And usually it's people that you already know, that you've done business with. And so it's, if you think marriages can get ugly, just wait till you get into business with a partner, because you're talking about money too. So it can get ugly. So you just definitely want to make sure that if you're working with somebody, you're setting up a business as a partner, you want to make sure that things are going to work out and that you clearly spell out who's responsible for what, how the decision making is going to happen. Definitely encourage you, if you're going to have a partner, get a lawyer involved. Everything's all nice, during that honeymoon stage or that courting stage, even in the honeymoon. But you want to be prepared and have everything outlined. In terms of liability, so here's the thing with the sole proprietorship. Let's say that you have that business, you have a car that you're using to travel to, you have a consulting business, you're on your way to meet with a client, and you are in a car accident and you're at fault. Well, one of the things that attorneys are very good at is finding whether you have a business or not. And if you do, then they'll look at it and say, this person has a business, and they're a sole proprietorship. Therefore, you have no protection when it comes to any type of lawsuits, legal issues. So they can take your house, they can take your car. So it's unlimited liability. That's the danger of being a sole proprietor, is that you're not protected. Limited partnership, it's limited. It's limited to the business. So that orthopedic surgeon leaves a screw in your hip, and I was supposed to take it out and didn't, and left it in there. Well, the exposure, the liability is limited to the business. You're not going to be able to take his house, his beach home in Boca Raton, his boat. None of that is going to be exposed. So limited partnership is protected. C Corp, you may invest in Apple. Apple may have a product that is determined to be harmful. They had to pay out money, but you as a stockholder are not exposed to that. You do not have to pay that part of that settlement. The liability is limited, just as for the executives in the company, the employees, it's limited to the business, not to their personal assets. Profit distribution, how are we sharing all the profits? So sole proprietor is just like you have a income from your job. That money at the end of the day, any profit goes back to you. Partners, they receive all the profits as well. They determine what to do with the money. Now for a C Corp, those earnings are paid back to stockholders. And so they could do that in the form of a dividend. They're issuing dividends to stockholders, or they're putting money back into the business to help grow it, to increase the value of the stock. So we invested in Apple at $130 a share, had great profit, good. They're going to reinvest it back into the business, create new products. That's good news. We're anticipating the value of the stock will go up. It goes up to $160. Great. Now that earnings is being paid back to the stockholders in the increased value of the stock. Taxation. Now, does that occur for a sole proprietor? It's going to be an individual tax. Just like if you're working at a job, that income is taxed in the same way. For a sole proprietorship, it's the profit that you receive that is taxed. Limited partnership, same thing. Individual taxation for each of our partners. They share the profit, and they are then liable for that tax on the profits that they earn. For the corporate, they're the C Corp, it's what we call a double taxation. So they're taxed on the sales of their products, and then they're also, taxed on the profit from their sales of their products. So the corporation is taxed on the profits, and then you as a stockholder, if you receive a dividend or you receive, you sell your stock, there's a capital gains tax. If you receive a dividend, there are earnings paid to stockholders. You have to pay taxes on that. So in a sense, there's a double taxation. There's a tax on the corporation on the profit, and then any earnings that are distributed to the stockholders, then they're taxed on that as well. So what happens? I get hit by a truck. Well, for the sole proprietor, that business goes away. You were the business. So it terminates upon death. Limited partnerships, same thing. If all three of our partners were at a conference and they crash into a mountain, well, and they all die, that business goes away as well. Or if just one of them was on that plane and we have two other partners, the business would continue on, but that partnership is now only two, not three. For a C Corp, Steve Jobs passed away from Apple. Apple continues to operate. The business will operate in perpetuity, even beyond the founder's death. All right, now flip over your paper there, and we're going to get into the other three, subchapter S, nonprofit, and LLCs. So subchapter S, a lot of car dealerships use this because here's where you can have investors. Back to the question about angel investors. You can have up to 75 investors in an S corporation. For a C corporation that we saw before, they can issue as much stock as they want. For a S corporation, it's limited up to 75 investors. A lot of car dealers cannot afford to have all those cars that they buy from the manufacturer to put on their lot. So they have investors who are giving them money so that they can then buy all those cars to put on the lot. And usually it's up to 75 investors that they can have. Nonprofit, so like Navy Federal Credit Union is a nonprofit. United Way is a nonprofit. The NFL, believe it or not, is a nonprofit. The owners are all for profit, but the NFL itself is a nonprofit organization. And then we have a limited liability company, and that's mostly for small businesses, and we'll get into that as well. So again, for subchapter S, up to 75 stockholders, the capitalization is similar to a partnership because you have all these investors who can invest in the money to help you raise the funding that you need. The voting policy is among the stockholders. Liability is limited. So if you're a car dealer, somebody drives off the lot and you're at fault, well, you don't have to worry about your home, your boat, all those things are protected. So liability is limited to the business. Personal assets are not at risk. Profit distribution, the earnings are distributed to all the stockholders, contributing to the funding. Taxation is going to be individual for the individual owner, as well as for the stockholders on their earnings. And then if the owner passes away, the dealership, that S corporation, continues on even after the person may die. For a nonprofit, well, no one owns that. So there's a board of directors that oversees that, or trustees who are overseeing the business. The capitalization is going to be difficult because you cannot raise money other than perhaps through grants, donations, but you're not getting investors. Instead, you're getting other organizations to support it. In the way of a credit union, it's the members who are part part of that credit union each are contributing money to it. It's only $5 usually to open an account, but the capitalization is coming from people borrowing the money, and the money that they're making on the interest from the borrowing that's happening at the credit union. So again, no one owns the nonprofit. Board of Directors is overseeing the operation of the business. Liability is going to be limited to that organization. There's no personal assets that are liable. There's no surplus that could be distributed to investors because there are no investors. And there's no taxation. That's one of the advantages here, is having it, so you have this organization that's not going to be taxed. And then it continue on in perpetuity as well. All that said, make life easy. Most of you will want to set up a limited liability corporation, and the owner is going to be you or other people who are working with you, but it's limited as far as how many people you can have, but the ownership is probably going to be you. And when you set up an LLC, they'll ask you who are the owners, and you can list them. If it's a husband and wife, if it's just you, if it's you and a partner, that's fine. But a limited liability corporation is usually the best way to go for most companies, especially starting out. That said, if you want to change to something else, you certainly can, to like a subchapter S corporation. When I started my consulting business, it was as an LLC. There's some tax advantages to go into a subchapter S, which is what I did, but it was easy to get started as an LLC. So the capitalization requirement is going to be same as a partnership. If it's you bringing in that money to get started, or a partner, then it's limited to those people. There's voting policies are not needed. You don't need to have regular meetings like you do with a nonprofit. With a nonprofit, you have to have a board president, you have to have a treasurer, you have to have a secretary, and you have to have regular meetings and minutes of those meetings to be able to show that there are a board of directors who are overseeing the organization. You don't need that with limited liability because it might be just you or somebody else, but you know, there's no voting policies that are needed. Here's the key. The liability is limited to just the business. So if we're out doing our consulting or we have a van where we're selling our custom-made lamps at a craft fair, and we're traveling in our van or we're traveling in our car, we're at fault in an accident, that liability is limited to the business. That's it. There's no personal assets that are liable. Cannot take our home, can't take our boat. All that is protected. So the liability, and that's the key here, the liability is limited to the business. So it's an easy way to get started. The profit distribution is going to come back to you. Taxation then is going to be on the individual, just like the profit is treated as income. So if whatever you earn, that's income to the members of the corporation. They are therefore then taxed on that income that's generated from the business. And then the life of the business, if it's just you, well, it would go away if you pass. However, if there's other people involved, then it would continue on until they pass. So setting it up is very easy to do with the state, and I'll go through that here in a moment. But here are all the differences that I just explained with the different legal structures. But the best thing to do is simply get set up as an LLC if you are not already. So what are the steps to do this if you haven't done it already? And keep in mind, you do need to be registered with the state in order to be able to participate in the competition. So if you haven't done that already, here are the steps you need to take. And it's very easy to do. It will cost you $100 to register your business with the state to file that. And then you'll have to pay $300 a year in property taxes on the business. And all that's doing is keeping your LLC. So your liability is restricted to the business. No personal assets are liable. So $100 for the initial fee, and then $300 a year every year after that when you're filing your taxes. Where do you do that? Just go to egovmaryland.gov, Business Express. You can do a Google search for the same thing. It'll show you. What I recommend doing is that as you're doing this and you're coming up with a name for your business, and you want to do this if you haven't done it already, it's now more important than ever to have a URL that's similar to your business name, so that people are searching on your business. It matches business name with the URL. So what you'll want to do is search for a URL that either matches your business name or closely tied to it. And one that I highly recommend to do that search and register your URL is register.com. Some people will use GoDaddy.com or some others. The problem that happens is, let's say you come up with a great name for your business, and you do that at GoDaddy. You say, okay, I'm going to think about it. And it was $18 or to register it. You say, yeah, I'll come back to it later, think about it. You come back to go ahead and register. Now all of a sudden it's $45. What happened? Well, what they did is they saw that you were interested in it, and they went ahead and then parked that URL, so that now if you're interested in it again, or somebody else is interested, now it's $45 when you come back to it. Register.com doesn't do that. So if you come back to it later, it will be the same price as when you searched on it. So you want to look for a URL that's going to be closely aligned with your business. Then go to step 2 here, where you want to search the patent and trademark records to make sure that that name that you came up with isn't already taken, that somebody else isn't already using it. Because the last thing that you want to do is have a business that you're operating, and then you get a cease and desist letter from somebody else saying, we already have this name and you need to stop using it. So you want to make sure that that name isn't already being used. Now, if you're just planning to operate in Maryland and somebody else has it in Seattle, and it doesn't look like they're going to expand, can you use it? Yes, but in this online world, who's to say that you're just going to limit your business to Maryland, and who's to say that that business in Seattle isn't going to grow beyond that? What if it's in a different type of business, like you're selling clothes and somebody else has that similar name and they're doing landscaping? Well, there's probably not an issue there, because what the trademark office would be concerned about is, does it create confusion in the market? Now, it's 2 completely different markets. Is it going to create confusion? Okay, so you can make an argument, and that's the key. Are you going to be prepared to go to court to fight that? Are you going to pay an attorney to argue that it's not related to a competing business, even though they have the same name? Are you prepared to fight that? If you are, go for it. If not, then you may want to come up with a different name. Where do you check names for the company? I have it up on the screen here, register.com. You can check it there. Thank you, Robin. And then step 3 here, now you have a name, you have a URL, and you can also go to the state as well to see if that name is already being used. You can do that at egov.maryland, but using the Business Express. They walk you through it, actually, and you can see, make sure that nobody else is using that name. Then you file the articles of organization for your LLC with the state. You create an operating agreement. This sounds complicated. It's not. And don't spend any money on this. Don't hire an attorney. Don't go to LegalZoom. You can do this very easily. Just follow the instructions. It's 1 page. It's easy to do. It'll take you 5-10 minutes. That's it. Operating agreement, all that is, if it's just you, there really is no operating agreement. It's just listing you as the person making the decisions. But they walk you through it if there's going to be other people involved. Then you go to the IRS, go to irs.gov, and if you they will give you an EIN number. An EIN number is like your Social Security number, but it's for a business. All right, so you have to have that in order to register with the state for your LLC, and you have to have that to set up a business bank account. All right, so you have to have that EIN number, get that from the IRS, then you can register your business with the state and set up a business bank account. And yes, you want to have a separate account for your business so that it doesn't get conflated with your personal. Makes it easier when you're doing your taxes so that you can deduct expenses from the business and it's not getting mixed up with your personal. All right, questions about that? Yep, you have the handout, you have the PowerPoint. All right. Oh, had a nice little PowerPoint here for you, or a video, excuse me, on difference between trademark and patents. So I'll check that link, but let me just walk that through with you. So, because I always get questions about this in terms of patents, trademark, and what I often get questions from folks asking, well, how do I protect my intellectual property in this business plan competition? You can't. So, because we are not going to sign a non-disclosure agreement. Let me tell you right now, I'm not interested in your business idea. The judges are not interested in your business idea. They have their own thing to do. I have my own thing to do. But as you might imagine, I'm working, and so are the judges, people involved in this, working with hundreds of people throughout the year. And we're not interested in pursuing your idea. And if you don't trust us on that, then I encourage you to find another competition. But you will not find anybody who is going to sign a non-disclosure agreement in any of these competitions, because we're involved in so many that there's it's just not realistic for us to be signing those types of agreements. Now, in terms of your intellectual property, so a couple things to keep in mind. There is copyright, and there are patents, and there are trademarks. So a trademark is, let's start with that, usually the easiest. Think of a logo. So the Coca-Cola logo, the McDonald's logo, those are trademarked that nobody else can use that. In fact, when Ray Kroc was looking at buying McDonald's, Ray Kroc did not start McDonald's. He's the one who turned it into a franchise. But what he was most interested in were those golden arches. he saw that that could be a brand, just those golden arches on McDonald's. So, and the process that they developed as well, that was important, but it's really that brand, those golden arches that he was most interested in, and they trademarked that. So if you have a logo, you have an image like that, you want to trademark it, you certainly can. It takes a little while. It takes usually about 3 years to get approved for something like that. And you'll see something with like an R beside it. That simply means that it's been registered with the Patent and Trademark Office. And then when you see the TM, that means that it's official, it's been trademarked. So, and then you have to provide some justification as to why that's unique, and that no one else is using it. And so that's usually where you get the attorneys involved. I've done this before with trademarks, but it can cost anywhere from $10,000 to $30,000, $40,000, depending on how much research and back and forth that attorney is going to have to do with the U.S. Patent and Trademark Office. But you can search on that. You can go to uspto.gov. Let me put that into the chat. So uspto.gov, and you could do a simple search to see what is the trademarks that are already taken, names that are taken, like I was just showing you with the names of companies. So that's trademarks. Copyright is anything that's written down. And so the PowerPoint presentation that I just showed you, by default, that is copyrighted. I created that. It's unique. Nobody else created that. It's my ideas put down on paper. You can't simply take that and call that your own. That would be a copyright violation. I did not have to register this with the Patent and Trademark Office because everything that we write down is automatically copyrighted. I have a bunch of notes here. This is, you can say this is copyrighted. If I write something down on a napkin and hand it to you, it's automatically copyrighted. Now the issue becomes prove that I wrote that, and I created that on a specific date. That becomes part of the challenge. So if you do that on a cocktail napkin, put down the date, put down your signature, but you want to be able to prove that you created that and there was a timestamp to it. My grandmother used to write songs, and she would, so what she did is that she would write the songs, the music, everything, and then put that in an envelope and mail it to herself. And it was the post office that was putting their stamp on it as to when that was delivered. And it was, so she had evidence from the Postal Service, U.S. government agency, saying that this is her work created on this date. So that's one way to do it, to be able to prove that. But that's the idea behind it. There are exceptions to things that can be copyrighted, like if you're creating original work from that, if it's poking fun at somebody or something, then it's exception to that copyright because you created something new beyond that. There's such things as things that are in the public domain. Just because you're putting something out on a blog or on the web does not mean it's in the public domain. So all the images that you see, all the stuff that's created in a blog, that is by default copyrighted. So you just can't take images off the web and use that. That is copyrighted material. can we get permission from a copyright person? I'm not sure what a copyright person is. What about works you put out under a pseudonym? Well, if you put it out under a pseudonym, that's going to be hard to prove that it was you. So you're masking that your identity there, so that becomes a bit of a challenge. From the Robin said, can we get permission from the organization? Yes, but you want to get that in writing, that you're able to use that. Here's the thing, though, is that you want to make sure that you're going to, if it's so important to you, you're going to have to fight that. If somebody's using your information and you don't fight it, and then several years later somebody's using it and you decide to take them to court, a judge is going to ask, well, why didn't you fight the other ones? Why are you fighting this one? You know, do you really care about this copyright at all? Because if you don't, then they're not going to uphold that. You can't kind of pick or choose. So you want to make sure that if it's that important that you're going to take somebody to court, you're going to fight it and try to make a claim on that. So is there any way you can trademark a pseudonym? Good question. I do not know the answer to that question. When they're looking at a trademark, it has to be unique, not used before. And again, are you willing to fight that? If somebody violates that trademark, then you're going to have to take them to court. When Under Armour started its business and making those unique shirts, the wicking shirts with the unique material, they decided from the beginning that they were not going to trademark, or excuse me, patent that technology. So a patent is a process or a material that you're producing that's unique. That was unique, and they decided not to patent the technology that they used to make those shirts, that apparel, because they didn't want to spend all their time in court fighting that. And when you do patent it, then you have to disclose how you made it. And then that patent is good for 17 years. So then it's going to become available to everyone after 17 years. So that's why you see like drugs, pharmaceuticals, the patent on them is restricted to 7 years because we want to have more of that medicine available to more people sooner. We don't want to wait 17 years for others to be able to produce something similar. So in terms of patent, one of the things that you have to do is to make sure that you're going to fight that. So the technology that Under Armour created, they said, you know what, we're not going to spend all of our time hiring attorneys to block Nike, Adidas from making similar apparel, because we are going to then, while they're trying to figure that out and copy us, we're going to work on the next thing, on the next great technology. And so that is the whole culture at Under Armour, is not trying to protect things, it's to instead innovate. And that's what they hire for. Other companies, they're all about protecting. So the Wright brothers, I gave you that example early on, where they first to figure out these flying machines, and they spent years after that trying to protect their technology that they created and patent it. There's no Wright airplane technology. There used to be, but they spent all their time trying to protect what they had built, that other companies were innovating and figuring out better ways to do it. And while they were trying to block others and protect their intellectual property, they were losing market share, they weren't advancing, and they were losing sales. So if you create a program like a 12-step or mental health program, does that mean a patient can get a patient or can you, I guess what you're asking is, can you copyright like a 12-step mental health program? Yes, you can, but is it worth it? Is it worth going through all that to protect it? Is it really that different, that unique, and that it's that you want to protect that? I'm not sure. I mean, that'll be a question for an attorney as to whether it's worth going through all that. I would like to copy my material by mail, created in 2022. Yeah, so it would still be protected, but it would be this year they'd be protected. But if it's in the public domain, prior to that, then it's available. But again, by default, everything is copyrighted. So you usually don't have to go to these lengths to try to be able to try to protect that. Instead, is it more important to work on the next thing instead of trying to spend your time in court trying to protect what you've already created? So patents, I touched on that briefly. These are processes. Intellectual property can be a part of that. It could be what you actually produce can be patented, but it has to be unique. And again, you have to show then the federal government how this is unique compared to anything else that's out there. And you have to be prepared that it's only going to be protected for a certain period of time. 17 years after that, it's going to become available to everyone, and they'll be able to get their hands on it. So hopefully that has helped. Glad to answer any more questions on the legal aspect of it. But usually what we found is that there's no amazing idea where, but let's be honest, that it's like, oh my gosh, that's brilliant. That's going to change the world. There are very few out there, and the ones that do come up, most people are like, that'll never work. Nobody's going to rent out somebody else's house and stay there, or their room. That's crazy. Nobody's going to do that. Nobody's going to go on an app and have some stranger pick them up in their car and take them someplace and pay them. I'm not going to do that. I'll take a taxi. That'll be safer. All right. So, but glad to answer some other questions here. But everybody should have the business plan template that we're using. And I want to pull up and the add back in here. All right, so we got our schedule here. So the business plan is going to be due November 12th, and I'll put out the link where you would send that business plan in. And we use a program called Submittable. It makes it easy for us to then share it with the judges. So that'll be the initial round. And then by November 29th, so you see how we spend our Thanksgiving holiday reading business plans, we will then determine the top 12 finalists. And so it narrowed down to 12. And you've probably seen we have quite a few people on these workshops. Not everybody submits business plans. We invite people who are interested in the workshops, maybe working on their business plan, may not be ready just yet. And some of the people going through this process may say, I'm just not ready at this point. And that's fine. I spend quite a bit of time telling people, maybe you want to give this some more time before you start launching this idea. So usually we get anywhere from 30, 40, I think we've had almost 50 submit business plans. So it's not everybody who you see on these workshops who are submitting their business plans. Then November 29th, we'll determine the top 12 finalists. Then you'll be assigned a mentor if you're one of the finalists. We also have some coaching that we'll make available in January, getting you ready for the final pitch. The longer business plan, more in depth, 12 to 15 pages, using the same template, but you're usually expanding upon the marketing opportunity, the financials, providing more in-depth discussion on each of those areas. That is due by January 20th. Then we have the competition on February 3rd. That is all done virtually. It'll be done over Teams. And just like it sounds, we'll have the pitch before the panel of judges, and you have 15 minutes to make that pitch. And then, but the judge is going to be relying on that business plan and reading those before your pitch. And then on that same evening on February 3rd, we will determine the winners, and then we air all of that on Facebook Live on February 6th. Last year we had about 25,000 people who viewed the awards on Facebook Live. So that's a lot of good exposure that you can get for your business too. All right. Seeing some of the chat here. And is it worth it as your intellectual property? I would think. All right. Can the pitch be a video? It'll be live, so but it won't be a video. Can't be anything that's pre-recorded, because you're going to have judges who are going to ask you questions. So it needs to be live, nothing pre-recorded. Good question. Just trying to read the questions as they come in here. Are there more classes coming to prepare for the next competition if you're not ready or not eligible this year? Yeah, we do seminars throughout the year. May recall we did our Be More Bold conference last year. We're doing stuff throughout the year. I encourage you to follow us on Facebook, on LinkedIn, CCBC Center for Business Innovation. Also on our website at which is ccbcmd.edu/innovation. There's a place where you can sign up, opt in to get more information. I'll put that URL in there so you have it. But we are always putting stuff out to folks about events that they might be interested in, classes that we offer as well. Other questions that I might be able to answer? Good. So yeah, other conferences like the one at Coppin State with the Maryland Minority Business program, lots of good ones and lots of good connections there as well. I encourage you to check those out. We are usually advertising some of those as well. What is EMMA? I don't know. Can't see the date for submission due, so sure we got spotlighted, but it's November 12th is when the submissions are due. I sent out that calendar in a previous email, but I'll do it again tomorrow, so everybody has it at the top of their inbox along with the playback from tonight's recording. Other questions? Give me a thumbs up. Has this been helpful? Was it what you're expecting? Thank you, Danielle. All right. Thank you. Yeah, and if you have thoughts, what more you needed from these workshops that I didn't go over, please let me know. It's always a challenge because we're dealing with so many different types of businesses. But hopefully you found it helpful. Several people have said so. So good. I'm glad. Yeah, it is a challenge to get you the information that you need, but also make it accessible for a variety of different types of business ideas that you may be working on. Michelle is working on his financials, trying to make sense of them. I totally agree. Again, I'm working on a project right now. We're working on the financials, and my head has been spinning with all the different numbers. And so I encourage you to work through them, walk away from them, come back, maybe give them to somebody else. Say, does this make sense with you? UVC with the financials, that's the unit variable cost. So we have the fixed costs, and then that's divided by the unit price, and then subtracted from the unit price is the unit variable cost. So it's important to understand how much does it cost for every service, every product you're creating. What are the variable costs to produce that? Michelle, any more classes dedicated just to this topic? We do. Continuing ed at CCBC does offer a business plan workshop course that you can take. It's not as good as this one, but it's okay. I'm kidding with you. It's probably better. So reached out to SCORE and SBA for a mentor to help. Yeah, SCORE is good. Hopefully you're able to find somebody, but they're overwhelmed, as you can imagine. So hopefully you're able to find somebody there. SBA, they're not going to help you. So SBA, what they do is they provide funding to banks. All right. They do not make loans. What they do is they're providing that funding. They have programs. What they will do is they will refer you to SCORE. They have some great tools, helpful advice, resources on their website. Now, another place you may want to try is SBDC. So there is where you can definitely get some help. And so I put that into the chat, SBDC. And there's local ones there as well. And we have great relationships with the local folks with the SBDC. And some of them teach with us here at CCBC. Is it good to register with SBR? Remind me what SBR is, what that acronym stands for. Danielle, also check with BCPL. Great point, Danielle. Baltimore County Public Library has folks as well who put on workshops, seminars for startups too. Let's see. All right. With that, we're gonna call it a night. And look, 1 minute early. What are you gonna do with all that extra time? Thank you, folks. I want everybody to succeed here. So if you have questions, feel free to shoot them my way. I've been answering emails as they've been coming in. But if I'm hoping we have 115 people participate. Everybody who signed up for the competition, that they participate, that they start businesses, that would be awesome. All right. So hopefully this is encouraging. Hopefully kept it real at the same time, but you want to pursue something that you're passionate about, that you've been dreaming about, that you're working hard, that you're willing to spend so many nights working on this, to make it happen, I want to help you. So let us know how we can do that, and support you along the way. But you know, and I get it, it's a leap, but you can do it. All right. All righty, folks. I'm gonna call it a night, and have a great evening. And look for an email tomorrow with playback as well as a schedule so that you have it. And yeah, we got this, people. Thank you, Danielle. Let's live out dreams. I agree. Let's close it on that. Thank you, folks. Good night.